Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 6th of December. RBA stands pat and maintains its neutral tone. The RBA held its policy steady at its last meeting for the year, as was widely expected, and maintained an overall neutral bias in the statement accompanying the decision. The board judged that by keeping rates unchanged, there are reasonable prospects for achieving sustainable growth in the economy and with inflation returning to target over time. Once again, there were no clear signs in the statement to suggest that further rate cuts may be looming in the foreseeable future, and as such we have to wait for the economic data to paint a clearer picture of where the bank may stand when it holds its first gathering for 2017 on February 7th. The odds slid somewhat on the decision, perhaps as the officials noted that an appreciating currency could complicate economic transition. We prefer to stand pat with regards to the Australian dollar heading into the new year, and we would expect any near-term trends in Aussie crosses to be triggered mainly by its counterparts. We would expect the Aussie to continue overperforming the wounded yen, but we would stay mindful with regards to its US counterpart. Aussie dollar traded lower yesterday after it hit resistance once again near the psychological zone of 0.75, and following the RBA gathering it tested our support hurdle of 0.7440. A clear break below 0.7440 could initially aim for the 0.7410 level, where another dip is likely to confirm that the recent recovery started on the 21st of November was just a correction and may set the stage for the 0.7365 obstacle. Yesterday, the UK Supreme Court kicked off the hearings with regards to the case on whether Prime Minister Theresa May should stick to her plans and trigger Article 50 by the end of March, or the Parliament has to give its approval before such procedure begins. The hearings are scheduled to last 4 days, with a judgment likely before the end of January. Although we may get some important headlines towards the end of the week, there is a lot to be done before we have a final outcome. Having that in mind, and given last week's soft Brexit comments by Brexit Minister David Davis and the head of Eurogroup Jeroen Dijsselbloem, we would expect the pound to continue trading higher, at least heading into next week's Bank of England policy meeting. Now GBP USD is testing the resistance zone of 127.60, and if the bulls are strong enough to overcome it, we may see them targeting the key obstacle of 128.50 as a resistance this time. However, I believe that sterling yen is a better proxy for playing sterling strength, given the recent weakness of the Japanese currency. The cross emerged above the resistance, now turned into support territory of 145 yesterday, something that may prompt extensions towards the 147 area. As for today's events, during the European day, Eurozone's final GDP for the third quarter is forecast to confirm its preliminary estimate and show that the bloc's economy grew 0.3% quarter over quarter throughout the quarter. From New Zealand, the global dairy trade index is coming out, but no forecast is available. In the statement accompanying the latest RBNZ policy decision, officials noted that dairy prices have increased sharply over recent months, but they assumed that some of these gains are due to temporary factors and are likely to reverse. As such, a soft print may not come as a surprise, while further improvement may be a sign that the outlook for export prices and domestic activity may be stronger than assumed, and thereby support the kiwi. In the US, factory orders for October are expected to have accelerated notably, something that is supported by the strong rebound in durable goods orders for the month. Although this is usually not a major market mover, it will be a +1 for the economic data, magnifying the case for a Fed hike before 2016 ends. So, for more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.